recording now, and people can just join in the next minute or so, and they will kick on. Lars in the house as well, because that is a fair bit that we got to talk about today. Fair bit, and we got everything ready there. All right, I think I'm gonna get started, and people can just catch the recording. So, without any further ado, welcome, welcome, welcome. And if you are here with me live today, thank you so much for joining. If you're watching the recording, thank you as well. We're gonna get straight into it because there is, like I said earlier, a lot of things to talk about. So, we're gonna start off first of all with the dollar, because this is gonna be kind of like the main narrative that we're gonna have to keep an eye on, right? So yesterday on the Daily Bias, I did share this chart, and I just wanted to run you through as to what exactly it is, because you might have seen some numbers and you're like, well, what is that, Aussie? So the fractal that I'm looking at now is 1, 2, 3 highs, 1, 2, 3 highs. If you do copies, 3 pointers, right? This will be the 3 point, if you know what I mean. And if you don't worry about it. But basically, this is what we're looking at here. That kind of 1, 2, 3. And if the dollar now keeps going higher, we'll have basically almost an uncharted situation where seasonality is out the window. In reality, I took a bit of a break yesterday, as you guys know, but it gave me a bit of macro context and time to think as to why this is happening. And it's not just seasonality. When we look at charts, of course, charts come in place and we trade the charts, we don't trade the news. But this whole couple of weeks have been pretty crazy. So it's almost like we had a storm brewing, and then it was like the perfect storm that brewed, right? So first of all, what we had some earnings, some pretty big earnings. We had Broadcom, which I had here. So the earnings came out. If you don't know what this is, this is one of the most probably highest indicator. It's for AI. So this chart has been obviously going on an absolute tear. The earnings came out positive, but the market rejected the news. So you can see from a couple of weeks, from this week, like a couple of weeks, I guess 20 days, or what is that, almost 3 weeks, has retraced 25%. So the narrative now is AI is no longer invincible, right? So this was the first piece of the puzzle that started to kind of crack when it comes to AI. So I'm going to take you through a logical process. So stick with me, and this is going to be a good one to watch again, because this is how we form a bias and a narrative, taking into consideration a few plays. So first of all, Broadcom dropping 25% tells us, hey, first of all, AI is no longer invincible. Secondly, we also had, of course, SpaceX. We haven't bought. I hope nobody here bought. I was pretty vocal about how I feel about RPOs. I think we always trade below it and potentially substantially lower, and it did just that. The problem is that for this run up, the amount of liquidity that got drained from the market was substantial, right? We're talking about trillions. So this was a 1 point, I think from memory, 1.77 or something similar in terms of evaluation. So money needs to come from somewhere. In other words, needs to exit some of the other stocks and enter some of the FOMO stocks. Now we obviously have a sell-off, which is exactly what we thought, but the run up in SpaceX contributed to a mass exodus of liquidity, or in other words, a liquidity vacuum, right? Think of it as a liquidity vacuum. We know that obviously MicroStrategy sold some Bitcoin, no dramas there. That was a little bit of FOMO there. But what I want to take a second on now is looking at NAS. So if you just remember what we just talked about with the narrative of AI is no longer invincible, and to Broadcom, right, 25% dropping, it's a substantial drop for a market cap this high. You got to think that NAS, and you also remember your indices, right? NAS is the tech heavy one. So NAS is heavily, if not entirely, composed of tech tickers. Okay. Yo, everyone in the chat. So at the moment we have some big bearish moves or correction in things like AVG, MU, basically all of the tech stock, NAS is going to take the biggest hit. And we talked about seeing bearish pressure up here. I wish personally I kept the short open, but can't win them all. And yesterday I also talked about this daily. Someone's got a hot mic. I don't know what it is, but just want to let you know. Because I'm not looking at the screen. The daily candle that we were looking at, this exact point was the reversal overnight for us here, Aussie, and yesterday for you guys in the US and EU. So the question that I have in now is this the start of a recovery here for NAS? In other words, was this the big correction that was always overdue, right? Like if you trade RSI and things like that, you would have seen probably this. This was a big bearish divergence down here. So in other words, price is going up, RSI was in the oversold, and in other words, was making higher high, higher high, but the ticker, the RSI, was actually making lower highs and lower highs. So this is called bearish divergence, okay? So we had a big bearish divergence there. I don't necessarily trade RSI per se, but it's a good indicator sometimes to keep an eye on as an extra sprinkle of confluence on higher time frame only. Anyway, back to NAS. So the question is this the start of a recovery now, or is this a dead cat bounce? In other words, was this bounce, which we had on the hourlies, right? And remember that we talked about this 4-hour order block being the first big target, and then I've got another smaller target down here in the 1 hour. Is this last 4 hour ago, 4 to 8 hours ago, this recovery that we had, is this a dead cat bounce, or do we now push higher? It remains to be seen. And what is going to be the big decider today slash tomorrow is going to be PCE. So this is the news, of course, that's coming out for us in what is that? In about 2 hours, 9:30, an hour and a half. So PCE. This is effectively the Fed's favorite indicator. How do I put it? It's a Fed's favorite indicator to talk inflation. Okay, so this is going to be very important in the next 2 hours. Right now, I'm not trading anything. I want to see PC how it comes out, because if it comes out as a hot print, right? Remember, everything has got estimates, forecast and estimates. So if it comes in hot, what is going to be meaning in English is that there's going to be more hike talk, hike rates, rate hikes. And if we go into FedWatch, you would have noticed that, and if you don't, I'm going to point it out to you. In just last week or 2 weeks ago, we were looking at a potential rate hike not before December. Okay, so the chances of a potential rate hike were not until December. And then just a couple of months ago, they were actually in 2027. Now, because of how Mr. Walsh has delivered um, the last FOMC, which was in a very hawkish way, and we talked about that last time. So if you remember hawkish and dovish, how it's delivered, the message is just as important as the message itself. What you're seeing is now we've creeped up in percentage and in probability of a potential rate hike as early as September. So there's a 49% percentage. Sorry, there's a 49% possibility that, or at least this is what the market is pricing in for a rate hike. Okay, so it's looking like at the moment the indices in general, so NAS, S&P, and DJ, if this eventuates, and we have obviously a hot print, then indices need to give back. In other words, we will have a bigger correction. Okay, so this is why the PCE today, it's not necessarily a huge news per se, but in an environment where we had an FOMC that was delivering a very hawkish tone, we had a FedWatch, a hot print right now is above. So you can see this is the forecast. So we go above, that's a hot print. Okay, so everything you can see up here has got forecast. Oh, sorry. Well, if you go into forexfactory.com in the calendar, you'll see that there's a PCE, and the forecast is 0.3%. The previous was 0.2%. Okay, so coming in anything above that becomes hot. Coming in below that, it's a cold PCE. So it happens in the next couple of hours. And by the way, love that you're camping. I wish I could be camping right now. Jelly, jealous. So yeah, this is kind of where I'm at in the moment at the moment with indices. I'm not trading anything. That 4 hour order block got absolutely melted through. We didn't quite reach an interesting level, or we did do the 618. We did hit the 618, but we missed the 702 here. So even wanting to do a long here, I wouldn't have been tagged personally. So I'm just going to be sitting and waiting. This is an environment for me where I'm just going to be waiting for the news to flash out market where it needs to go. Because just remember, market does what the market does, and news is just an excuse. But at the moment, yeah, it's a little bit up in the air until we get this PT. I was pretty bummed here that we didn't get this short. This would have been a beautiful short on NAS. The 1 hour order block, which we looked at here, still could have given a potential long, but I wasn't a big conviction. This is definitely more at value. And when I mean value, I mean obviously in our kill zone. You can see this 1 hour order block down here coincides with the 76 level. So this will be an interesting level potentially for S&P to long. And I want to ask something in the chat real quick. And what do you think that NAS dropped a lot heavier than S&P? You can see the S&P kind of held a little bit better. Do you have any inclination or any idea? If not, all good. The answer is this. This is the answer. Dow Jones. Okay, so Dow Jones, if you remember, this is the old money. Remember we talked about it, Dow Jones being the old money, meaning obviously it's the old school investment. It's your banking, it's your safer kind of investment, right? Whereas NAS is obviously very much just we just talked about it, just tech. Now we have Dow Jones, which is deemed as what? Dow Jones is now deemed as a more safer in a way, right? So it's a safer environment for investors to move towards. And S&P, if you actually understand how it works, S&P is a composite of both. So S&P has 500 companies, of course, that's where the 500 comes from, and it's a composite of tech and old school investments. So the Dow Jones is what effectively held S&P a little bit better than the NAS. What we're seeing now is the play, and I'd love to know if anyone took it with the 15 minutes up here, because this would have been a beautiful short right here. We talked about this level. I had the candle highlighted. We talked about it on Wednesday. So what the other day, just this was the level. I think it's also in the daily bias. But anyway, so Dow Jones is now possibly going to correct as well. Okay, so I do like the fact that we had this 4 hour candle. This was if you look at the way it worked, it came right into the candle that we were looking at, the 15 minutes, came into here, closed below. Now we have obviously an attempt to push lower. So I'm expecting Dow Jones to now correct as well. So indices, I am leaning bearish. Everything will be dictated by obviously the news, which is happening very soon, PCE. So that's kind of like the macro on indices and dollar. Very important. Gold and silver, they absolutely traded outside of our range. So there's this at the moment. I'm gonna do this, and I'm just gonna clear everything. I am going to go back to the drawing board because this level is now invalidated and we have traded below the hourly range. So the next range, the next logical range, and I'll delete the fib as well so you can see it. We now have two ranges. We have a macro range, of course, which is better visible probably from the weekly. So price came up, paused, form structured. So this is our anchoring low into our obviously high. And we're now trading somewhere around the middle of this external range, of this macro range. We're sitting just below the 618. Actually, we are not far off from the 702, okay? So that's our macro. And then we're also trading inside at the very extreme, mind you, of an inner range. So this low into this high. So if I take a fib from this low to this high, you will now see that we have well and truly traded on a weekly below the AA6. If you know fibs and if you know what those levels mean, you will know that when these levels do get closed below, it means that this whole range is likely going to fail. Very likely. Okay, so this is the good old slingshot. The rubber band is about to break. And therefore, I am very much leaning towards having this now as a potential invalidation in the making. And I'm going to make it like this. So we can see that this range is likely going to be traded well and truly below, which means we'll likely see a 3,000, a mid 3,000 gold again. And if gold is going to be pushing lower, guess what silver is also going to do? Same, right? So this is the macro range. You can see, I'll make it a little bit bigger. This range is now well and truly been, oops, sorry, that's the wrong one. I'm trying to look that one. This range is, well, now truly been invalidated. Okay, so silver is going to, in my opinion, give us slightly better risk to reward here soon because it's already trading at, you can see, almost at the AA6 of the macro range. The same range that we were talking about for gold. So this big box from down here all the way to up here, you can see gold hasn't even quite tapped the 702, whereas silver has already retraced much more. So it's not a surprise because silver does tend to be a lot more aggressive. So the question that I would want to flag, and I'm not going to absolutely enter it long here because just because this could potentially be the range as well. Because you can see how price came in here, stalled, created a low, a base per se. It's like this is like base camp before you go to Mount Everest, right? Created a base and then boom, proceeded to go higher. So there is also very much a possibility that this is the range that we're looking at now. So the way I'm trading it right now, I'm trading this macro range as my anchoring base, and I'm trading this internal range, which I'm actually going to change so you don't get confused in the charts when you see it. Let's have a look. We'll change the naming. Otherwise, you say, hey, Aussie, why do you have two macro ranges? Let's change the name and we can do range daily. Oops. You'll see in the daily now. So we have these two ranges playing effectively on silver. So I'm not eager to press any buy at the moment, nothing. I just want price to effectively come into value. And value is going to be either down here at the very bottom or down here below this daily range. In terms of possible setups, you can see we've got some nice sell to buy moves down here, but these are well and truly below the AA6 on, oops, sorry, my brain is just not here today. I am thinking about other things, so that's why I am not taking any trades as well. Very important, actually. Talking about mindset for a second. If your brain is somewhere else, don't feel like you have to trade because you'll do bad decisions. Okay, so take a day off trading. So we can still do analysis, but I'm not going to press any buy or sells at the moment. What I'm seeing is this is a potential first target, reversal target. Okay, down here, tiny little target, and then I've got a much bigger target down here as my bigger position, bigger size. Okay, so but for now, gold and silver, I'm just not interested. And there's a reason, of course, behind everything. You know, we look at charts, we trade the charts, but if you think at where the strong dollar is what is strong dollar meaning this means that investors are putting money into the dollar, and if investors are putting money into dollar, they're taking it away from risk on. The first risk on asset that you can think of is always going to be gold. Okay, it's not Bitcoin, it's gold, and silver obviously does what gold does. So it just makes sense that if you have a hot dollar, just keep on making highs. You've got obviously, actually, a good one that we haven't looked at right now that I wanted to talk about is the 10-year-old bonds. So the US bonds, this is a really nice divergence. Okay, so historically, you'll see that bonds and dollar are tend to be, and I said tend to be correlated. Whereas now what we see is we have a very hot dollar and we have the bonds, which, like I said yesterday in the bias, they're the only ones that are making sense. We said we want to see the bonds collapsing, and we'll likely see them down here, and it's actually happening, right? This is the one that is making sense. There is a big divergence, so the dollar's going up and the bonds are going down. Excuse my, I can't even spell anymore. But this, what is happening right now, we have an Iran situation. So the whole war currently talk of peace, everything is rosy again for now. So this war talk is over, helps the bonds dropping, right? Because all of a sudden you don't need those safe havens anymore. There's this peace again. People have more risk appetite. So bonds are obviously one of the safer assets. So it just makes sense that when there's peace, these bonds are going to be talking. But what we do see, and I hope you remember the FOMC chat that we had the other week when we were talking about the hawkish and how it's delivered. What we're seeing now, this dollar going bonkers right now, it doesn't make sense at a time where there's peace, right? So why is the dollar not following the usual trajectory of this piece, therefore we know we're going to drop? Well, the reason is we're seeing Mr. Kevin Walsh, the Fed chair, delivering a hawkish speak. Therefore, there's a premium attached to the dollar right now. And what I mean by a premium attached to the dollar, we have to go back into the CME Fed Watch. Market is already pricing in rate hikes. Remember, market doesn't react immediately. Sure, there's reactions, but smart money prices in events. Okay, so when you see things like, why is the dollar going up? If we have a piece right now, you have to look at the bigger picture, and the bigger picture is market is already pricing in a rate hike. Okay, so hopefully this helps you understand like how we come up with a very macro view on things, right? Let me know in the chat if there's any questions here, because this is something that I want everyone to be comfortable with and understand. It's super important to be able to analyze the market as a whole, and that's why I do the daily bias in that format, just to give you a big comprehensive view of everything that I'm looking at. Okay. Drink it out of my Grinch cup today because I feel like a Grinch. Any questions in the chat? No, I think we're good. We keep going. Cool. I see no questions. I'll keep going. So this is the macroeconomics that I'm looking at for dollar, NAS, S&P, and Dow Jones. Gold, silver. What about oil? Oil is the one that is making sense again. So it was just a bummer that we couldn't get activated in that short. That would have been a beautiful short, but it's so clear where it's heading, right? Let me just hide everything. There's a massive fair value gap there on oil. It's of course going to be a target, and we talked about this now for a few weeks, I think, for a couple of weeks. You can see there's a little magnet there. You know what the magnet means. We are now trading there. Okay, so we're now trading here. This is the only chart now that I'm kind of interested to start looking for longs, because we have two possible ranges. We have a low to high from this low, from this sell to buy, and that takes us to the AA6 on the dot, currently trading. And we also have the macro range, which takes us a little bit lower into that fair value gap on the 76. So first of all, we're going to clean up a chart. We're not looking for short anymore because that is gone. That setup has left the station. So now I am potentially start looking for longs again here on gold, and it will be possibly here in this daily sell to buy move. And for this one, I would actually want to take the wick, the full thing, because the body's not big enough there for me, and there is a fair value gap above it. So something like this on oil, and I'll make it red and I'll make it green. I am not against, okay? And doesn't have to be all the way. I'm not going all the way back to all-time high. It will be possibly, 1 to 2, maybe a 1 to 2.5, depending on where your stop loss is. I will want to put the stop loss ideally below this kind of equal lows that have formed down here, just in case market does decide to wick down and refill liquidity. So something like this on oil, I'm not against. And of course, you can look at better entry into one and into two. So we scale down. We never take an entry just from the daily, right? We always have to look at lower time frame, what the market hands us. If it hands us a nicer entry, that's that 4 hour got traded into. What about 2 hours? Let's have a look, see. I do like that 2-hour entry there, so I'm just going to mark it. 3, 2. It's a nice candle that takes previous liquidity and is not traded into, so that sits just below the A6. That's also a very dangerous candle, but it's not. It's in the middle of a move, so I do like this 2-hour candle for a possible entry too. So on a daily, let's have a look how the trade will look on higher time frame on oil. So that will mean an entry too will be here. I could be a little bit more generous with my stop loss and cover my but in case we come back into this daily fair value gap, which is well and truly below the AS6. So this will be an extreme entry. In fact, what I probably want to do, oh no, where is it? This is the daily. Yes, we're on the daily. So there, this could actually, I like this setup like this because it still gives us a 1, 2, what is that 1, 2? If I take me back to the body of that buy to sell. So this is still a 1 to 7.5, and this will be a 1 to 2.5. So on oil, basically what I'm trying to say is we're trading a discount, we're trading a value. Okay, so and I don't care too much about what's happening in the world. I buy value and I sell value. I buy discount and I sell premium. Okay, so that's how a trade mechanical trade system works. So at the moment we're trading in our little handy dandy magnet, and I'll be ready to buy to press buy soon. That's all I say. Okay, so not too much, nothing too hard and complicated there on oil. I will want to see how price reacts in the fair value gap as well. BTC. Okay, so basically we have now traded below, and I'm just gonna hide this. Let me just clear this chart up because again, I don't like having too messy charts. Old done. That daily is that daily candle has been traded off. Now, this invalidation zone that we drew last week, I think it was, I said, if we trade below 60,878 and we close, we're in big trouble, right? Look at what's happening. 30 minutes to the daily candle. Can you guys see it? Can you guys see it? Are we closing below? Likely not. What that tells me is that this was a very manipulated liquidity grab. In other words, we're wick below, we grab liquidity. See how we traded below the previous low at 59, and now we're starting to reverse higher. So I think price is going to respect here for now. That's what it looks. It looks price wants to respect, which is fantastic. I'm still not discarding. Oops. I'm still not discarding my weekly candle, which is down below here. I'm not discarding it, right? But I do have a feeling that if, and the emphasis is on if we come back into this candle, it will be the same situation that we just saw here on the daily. In other words, a big wick, a big liquidation event. So what I do recommend doing is setting up an alert, a limit. These are the time where setting up a limit really can pay nicely. The 3 days has got a nice candle there without all that crazy drawings that I've got on the weekly. You can see right here, this 3-day candle, sell to buy, never got traded into, and we are still not there. So I've got a limit set up on that 3-day candle personally at the body, from the body to just a little bit below, obviously on the stop loss, in case we do a wick very quickly. I recommend doing the same, just in case we do a wick. But for now, in the more immediate, right, because now we were looking at obviously longer term, looks like this level might hold. And if it does hold, what can we expect? We can expect price to do what? To create liquidity, and then maybe that's when we do something like this. Okay, so if we have a range, as we know, market doesn't just move up or moves down, also moves sideways. If we have a range, we can play the range. So very cautiously, this could be a level where now we start to look for longs and shorts, and we play the range. Okay, so I'm not against going into lower time frames. We're talking minutes, we're talking hours, we're talking 15 minutes, 30 minutes, 5 minutes, and start scalping some crypto setups, because we are effectively on, or looks like we may be ranging now for a little bit here on BTC. Okay, so don't chase anything right now. Obviously, market just had a big pump. I'm not going to take anything. Ooh, get rid of that. But if we do maybe come back into this 1 hour candle, this could be a nice little entry. What about 30 minutes? What about 15 minutes? Nothing there. What about 5 minutes? I do see, and we've seen this setup, this type of setup has played in front of our eyes so many times, right? Now we are creating liquidity, which means we'll likely come back, grab it, and potentially enter somewhere down here. I don't see anything on this chart just yet that I'm interested in. Oh, actually, I'll take it back. There you go. At the very last time frame, we have a 1 minute candle right here. Very last time frame. That is my 1 minute entry right there. I'm gonna set it up. So I would not be against start playing some little scalps. And if you do notice on the 1 minute, we actually have a couple of sell to buys. There's another 1 minute down here. And this can be our entry to. Okay. So I'm not against, I'll just get rid of that so we don't see the 1 hour on the minutes, and we'll keep it nice and clean. Okay, so that can now go. See you later. And that is now the 1 minute. From there, covers that entry to, and just taking us back to kind of like the start of this buy to sell up here potentially. What do we have? Big sell, buy to sell there. But really, this is probably just a 1 hour move or something. Yeah, it is exactly what it is. 1 hour move. That's a beautiful take profit. So even entry 1 is a 3.8, almost 1 to 4, and then from entry 2, you would want to put it somewhere around there, just a little bit below, and something like this will be a 1 to 6, clean 1 to 6. So yeah, there's a couple of possible setups here for Bitcoin. Not saying it will activate. You know, we might just go up from here, and this liquidity can just be left there for later. But that's what I'm seeing. Ethereum, we are back into pretty much our entry now, so I'm not touching. I'm still riding this. I like how Ethereum and Solana both actually have shown strength. Solana did tap that daily candle that we talked about yesterday. I am a little bit mad that I gave you guys an entry 2, which was very sniperish. So the entry 2 that I gave you was off of a minute, I think it was. Where did we look at it from? Was that a 4 hour? Sorry if I'm moving quick. Yes, it was out of this 4 hour candle. This was my entry 2, right? So I gave you guys an entry 2 down here off of this 4 hour. In reality, Solana entry 2 was in this daily order block. But that's what entry 2s are made for, right? Entry 2 are there as an absolute best possible risk to reward, a sniperish kind of behavior. So it didn't activate, that's okay. But Sol is still showing strength, and I'm happy with that. Sol and ETH. So yeah, it's a very tiny drawdown there on ETH as well. But overall, I think we are gonna be fine. XRP is going to the bin. We can throw that into the bin now, because we are now officially doing what? We now delete that, delete that, delete that, and delete that, and delete that, because look at that on the daily. What are we forming? Lower lows, team. Unlike BTC, which is holding, by the look of it, XRP is not. Strength shown, big fat zero for XRP. So yes, not interested there. Staying clear. If Sunday's on, Sunday loves to short XRP. I was gonna say don't short anything here because obviously we're at a low. But yeah, so that's crypto. Now, stocks. Let's go through because we've got a little bit to talk about here. And we talked about obviously Broadcom AI narrative showing that hey, it's not a superhero anymore. It can drop 25%. Also, very important to notice things like Micron technology. So we're now talking into chips and we're talking about hardware, right? Super important, obviously, for anything AI computer driven. We have our earnings on MU. If you've been following Twitter, you know that people keep telling you, buy, MU is going to the moon. You're not going to buy a chart that has already gone up this much, right? Since 2026 alone, this chart has gone up 4.5x, 4.5x. This is not the time to buy. This is the time to take profit. And in reality, what I'm seeing here on MU, it's pretty clear, right? It's on the chart, big liquidity trend line. So earnings positive, we'll see. But I still think we'll kind of come and correct here. If this chart starts to fall, we're now going to see also other charts. And look at this as we speak. Boom, big drop. So ASML. So this is now talking chips as well. Big correction across the board in tech. Okay, so tech and hardware is now selling off. This is an 11%. Even Nvidia dropped extensively, right? Like from 3 days ago, from the high of Thursday, we dropped 8%. And if you took that high from back in at the start of May, so mid-May, we dropped 16%. So big droppings across the board. This is Taiwan Semiconductor as well, the largest semiconductor manufacturing for Taiwan. Big correction, big gap up yesterday. Like when you see this kind of major stocks dropping 8%. I know that for us in crypto, we conditioned to think that 8% is nothing. It's a big. Oh, thank you, Lars. Thank you, brother. These are big moves. Okay, so 8% for a fund that holds millions and millions and billions potentially in customers' money. 8% is big money. Okay, big boy money. I wanted to show something here on ARM. Who took ARM back in March from that other server? If you did, you've gone up 343%. And I said earlier, I'm completely out. Full disclosure, I'm completely out. But I wanted to show you something. The power of fib extension. This was the setup from high to low, from this low to this high. This was the setup. Okay, from this low to this high, we waited for this 76 at 86, 76 tapped beautifully. Look where we are now. Fibonacci extension, perfect tap, major correction. Okay, so these are the levels that I talk about with some of my students, right? Probably when we do, these are the level for massive swings. It requires patience. This is a setup that took 133 days to eventuate. Like the question is, do you have patience to sit on a stock for 133 days? And do you have the ability to press sell when you need to sell instead of just bag holding, right? So if the stock goes up this much, 4.5x, you should be taking profit. But I just wanted to show you because this is cool. 2618, absolutely to the T. And this is also ARM holding. ARM, if you don't know what it is, Windows, ARM64, the chips. This is the company that makes them, okay? So ARM is another chip company. And obviously you can see now from the high of the other week, we've now dropped 25%. Can you start to see the pattern? Chip, semiconductors, all starting to sell off. The question still is, remember in NAS question, is this the start of a recovery or is this a dead cat bounce before we see more selling across the board? Too early to see, okay? But pay attention. This is the week to pay attention. Stocks that I'm very interested in and I'll keep adding a little bit and doubling a little bit is Now. So ServiceNow, a lot of FUD at the moment on timeline of ServiceNow. In reality, what we do see is obviously we had a big volume coming in. You can see how market is going down. volume is going up. So I'm adding here personally. I like this level, and I'm going to be in long term on this stock. I am aware that there's a possibility that obviously we can come back and take this low. So if I'm buying at 93 today, I can see this stock going to 79. The upside is potentially going to $200. So there's always a risk to reward in terms of stocks, right, and everything we do. Another one is PayPal. I know that I think it was Vagabond in the chat the other day was asking about PayPal. What do we do? I'm adding. The business is not broken. All financials are strong. Okay, go into Yahoo Finance and look at it. This company is making money. They've got all the right things. There's all of this. This is not a financial or a fundamental broken company. This is a strong company making money. Okay, so in reality, by a time frame, we're now sitting at absolute value. But I don't think PayPal is going anywhere. Okay, so my downside is again same. We just do the same exercise. My downside is go to $30, and we're sitting at 42. My upside is we go somewhere in some of these imbalances, 170, 200. So you tell me if this makes sense or not. Okay, so to me it does make sense. Another stock that I'm interested in now, and it has officially hit our zone that we talked about a couple of weeks ago, is Circle. So I am going to cautiously, big emphasis on cautiously, I'm not going to try to spell it, but in the, okay, Circle, yes, correct. So we are going to see some bullish news coming out here soon from Circle and integration. In reality, the chart is giving us a perfect opportunity to do what? To buy at value, to buy in our 76 area. Fantastic. We are sitting now in our DCA zone. So I'll buy in a little bit at 70. I'll buy a little bit at 65. I'll buy a little bit at 60. And maybe I'll buy a little bit at 55 if it gets done there. Okay, so Circle is on. Circle is active as a stock play. Another one that I am going to start doubling in, and this was obviously affected per se by SpaceX dropping, was its Rocket Lab. If you remember, Rocket Lab was something that it moved away from us, and we talked about a few weeks ago about this gigantic DCA zone where I wanted to buy basically from 85 all the way down to 40. If it does get down there, there is a chance that we might see this level, right? This buy to sell at 45 could potentially enter. Someone's got a hot mark again. But we are sitting now at the entry of my DCA zone. Okay, so oops, that's not the right one there. So adding a little bit today, 85, adding a little bit of 70, adding a little bit of 60, adding a little bit of 50, adding a little bit of 45. I'm not telling you to go and put all of your life savings in here, but I do like to DCA on the way down, right? To trying to bring my price down. And then eventually, if you DCA lower, you've got a pretty good average when the price moves back up again. This company is not going anywhere if SpaceX is going to make it. They are launching a ton of smaller, like obviously, I call them missiles, but rockets, right? This is a small satellite market. It's not going anywhere. SpaceX, all these, even the Amazon one, they big missile rockets that we're looking at, but the small satellite market is just going to grow and grow and grow. So this is the company that I'm really interested in long term, and it's kind of like a better bet on SpaceX, if you like, without having to bet on a completely new chart that you just don't know when this thing is going to bottom out. You just don't. There's no indication, right? This is IPOs in a nutshell. Whereas here on Rocket Lab, you can see the structure on the left. I can have an idea of what my downside risk is. So I am adding. So Rocket Lab and Circle are active for me. Microsoft was a beautiful example of of patience and waiting. Remember that I said I'm not buying here at this level because I do see a big head and shoulder forming, and I do see the value in this gigantic move that we did from this low into this high. You can see the fib is anchored there. the 702 into the 786 is still pretty far away. So I'm not buying anything. We're sitting at 365, which is funny because Microsoft is 365. But at the same time, I'm going to be waiting for basically mid 200 to low 300s, okay, before I even touch or look at Microsoft. So that's it. I'm not doing anything there, but just wanted to flag it because we did talk about it. Lots to talk about. I'm out of breath. Do we have any questions in the charts? Was everything clear? I know that this was a bit of a macro, but I wanted to really give you an understanding on how we form a bias and when, at what stage we go, hey, why is the bias invalid? What happened? What changed? Okay, so now you have an understanding on what I've been looking at. So let me know if there's any questions in the chat. It was a lot, so luckily it has recorded, so you can go back and rewatch it a few times if needed be. Nah, clear as mud. Can see somebody's typing, so we're just gonna wait a second. Can you buy you can. That's a beautiful thing. So Noni, for those watching the recording, Noni is asking in the chat, can you buy fractal or stocks? In other words, say for example, I want to buy MU, right? Which I wouldn't, and I wouldn't encourage to do so. But it's $1,200, so you can't really afford $1,200. Well, guess what? Now these days you can buy just $100 over $1,200, which is really, really cool. So you can do all these things on chain. So a lot of these fractal coins, you can buy them on chain on things like Hyperliquid and whatnot. You can actually buy positions. Some stockbrokers also allow you to do fractals. I'm not sure personally. I tend to buy holes usually, and or I do options for the cheaper ones. But yeah, other than that, look into Hyperliquid. There's definitely ways. Yes is the answer to your question. Good to see Hood decoupling from crypto. Yes, so Hood, Robin Hood, actually this one just went away, and that's okay. This one was the one that I said I wanted to wait to call for this move. Remember, it was here back in start of June. I wanted to see this liquidity taken. I still don't think it's not going to happen. I do think this 702 was a beautiful area of rejection. Yeah, just give me lower. That's all. But Robinhood definitely has shown some strength here. There's not a lot of volume though. That's what we've got to be mindful of, Vagabond. When you look at these stocks, if you look at the volume, it's starting to dry up a little bit. See, even down here at the lows, you had a lot more volume, whereas now the volume started to die off. And usually, this is a good lesson on volume, not just on stocks, but on anything. When you see volume drying up at highs, right, obviously you can see here, this was a high, and then you can see a tiny little doji. When you see volume drying up at highs, usually means there's a correction inbound. So that's how you can use volume. QCOM, we can have a quick look. QCOM, we'll bring it. Oh, do I have it here already? Oh, hang on. We'll bring it here. Yeah, I know that I'm looking. I definitely have the chart. I don't have it on the daily. Yeah, cool. So this is a quantum computing stock. All of the quantum, actually, I'll just go on the quantum and I'll show you because I was looking at it earlier. So all of the quantum stocks at the moment, they are going to be giving us a correction, in my opinion. I still want to buy a value, so I'm not chasing the highs. IonQ also is going to come back here, in my opinion, down potentially at least to correct this move. I don't know if it's going to correct the whole macro move, but at least needs to correct this move. So anywhere, from the 702 all down here, this is where I'll be. If you don't have any exposure and you want a little bit of, quantum exposure, I don't mind buying a little bit lower. Why is it not working there? This is my DCA, that's why. There. I don't mind, buying when it comes into value, but right now it's just too extended. Rigetti company, this was the one that, in my opinion, is going to potentially correct the most. and this is also one of the more dangerous one when it comes to quantum computing. It's a bit more of a bet. They had a massive pump because Trump added them to their portfolio. But I want to see this gigantic liquidity trend line at least retested, not necessarily broken, but broken will be ideal because look, we've got equal lows here and trend line. So in my opinion, Rigetti is going to be the one that is going to give potentially the best risk to reward. QBTS is just going up and quantum is just too high. This so nothing there. Yeah, so you want to wait. Yeah, sorry. That was a very long-winded answer to say just wait a little bit. Just wait for correction. Look at on a 3 days. If this is the move, you're currently sitting at the 50%. So this is no trading zone, and what you actually have created is a big pool of liquidity. So in reality, the magnet, right, is below that liquidity. So anywhere down here, 702 into 786, if you want to catch a smaller move, and you want to, ride it not necessarily to all-time high, but if you want to trade it as opposed to invest it, something like this you could do. Oops. On this, it's a 2.5, but for investing, I will want to wait for lower. Yeah, just gives me a better risk to reward long term, and I can take this a lot longer. Okay. Cool. Yes, that's correct. We got Head and Shoulders literally everywhere at the moment. We don't trade necessarily patterns per se, but what Head and Shoulders really telling you is, hey, there's a rejection. Just the anatomy of a Head and Shoulder, right? So anatomy of a Head and Shoulder, and then we'll close with this. So we don't trade patterns, but the anatomy of Head and Shoulder is there's a shoulder, there's a head, and there's another shoulder, right? And then obviously we drop. In reality, what we had here, we have likely a higher high, or potentially even a lower high, doesn't really matter. But then we have inducement. This is market inducing all the retail, letting them think, hey, we're going to go higher. So people start pressing buy, and then in reality, on the next leg up, market fails to make another higher high, and then that's the move. So all the retail that was pressing buy up here, they just got liquidated. Okay, so Head and Shoulders is just another way of understanding inducement if you don't understand what it is. On that note, I am going to go because I've got to go and pick up somebody. So you know where I'm going. I'll put it in the chat. I don't want to put it here because it's recorded. But yes, I will see you guys and girls soon. I'll put the recording up shortly, and we'll catch up later. Have a great rest of your day. And yeah, good call. Covered a lot. So the name of the game is patience. Just be patient, fam. Catch you later.